The following is a presentation of TFNN. Our Trading Hour, 77927-6648. Internationally at 727-445-1044. Now, David White.
And we're back behind the semi-flat black microphone here at TFNN.com, your headquarters for technical trading and investing. I am your host, David White, the one, the only Chartnado. There are many people claiming to be Chartnado. I am the true Chartnado, and it is very interesting. So as we go through the day here, we're going to have kind of a very interesting probably close out here. When we look at the S&P, since we are probably S&P centric at the moment, I actually wrote about it. The Chartsupial, I'm also being called a Chartsupial. Anyway, we've got a market that is in a down trend, at least in my opinion. So interestingly enough, we had a nice little pop in this market right after the open. And I wrote in my newsletter, be ready for some volatility today, at least intraday. And probably by the end of the day, we're going to be right back into the trend that we were in. Today is the day that option market makers go delta neutral. That means they've had positions and they've hedged those positions. But they've hedged those positions thinking there was a direction. When options get to the last 7 days before expiration, they become way too volatile for them to risk their money, or at least they think it does. So probably 80-85% of option market makers will hedge out the last 7 days. And, of course, if they're long on one side on options, then they'll short the underlying equity itself. All they want to do is lock in any profits they have, and hopefully as the decay goes along, they'll keep the premium and even make a little bit more money, whether they're short or long. And, of course, if they're just doing spreads out there, maybe they'll take some off. But what they need, and mostly what happens, is the market will kind of move. Even in a rather dull market, you'll find this Wednesday before the week, Friday expirations, basically 7 or 8 trading days before expiration. Normally you'll see the option market makers come out and make a little artificial volatility if there isn't any kind of real volatility. Now, we're off a half a point on the S&P cash as we start the show. Volume was great right out of the box this morning. We're closing in on 2.3 billion shares. So we are starting to see more and more volume. And one of the things that can happen, most people don't think about it, but if you are short the market, then you've got to cover. Or if you're selling calls and been selling calls, then you can probably either back it up by picking up puts on the other side, or you can sell or buy the underlying equity on the other side, depending on whether you're long or short. And that will cause normally a pop or a dip, depending on the direction the option market makers believe that the market is going. Not only do the option market makers happen to be right a lot, even if they're wrong, they'll use their considerable cash. They'll call over to the other side of their brokerage and say, I know you got a big ETF over there and you got some funds. Use them today. Prop up this position over here. Now, theoretically, that's not supposed to be legal, but my guess is it still goes on. There are calls, inner calls between places in the giant street name out there. Let's say a Goldman Sachs or a J.P. Morgan. There'll be ways of doing it inside the company. And, wow. We got a little bit of One Flew Over the Cuckoo's Nest music coming in here just offhandedly. Don't know why that is. We're not alone. Aliens are among us. Anyway, we're off a point on the S&P cash. Not a big deal other than the fact that we did go higher and that we do have a great deal of volume. What is most interesting is that almost always by about 2 o'clock, the option market makers are done fiddling with the market. Sometimes they start early, especially on Tuesdays. And if there's a day of vacation somewhere in there, it will happen on Tuesdays normally. But in Wednesdays, you're going to normally see huge option volatility. You'll see huge options volume, and you will see intraday squibs like we've seen today. So just remember that every month, the 8th day before expiration, to look for a little of this. It doesn't mean a great deal in the long term other than normally the counter trend is what you want. So in a up market, they will push it down and try to shake it the most weak hands they can out of the market if the market's probably going to expire higher. And, of course, 80% of options expiration cycles are positive. That is, that they will be higher than the low of today. So there is a little bit of problems going into a market like this that is lower. After the close tonight, I will run some scans and look at what is available in the option markets and see if they are telling us anything. Because this is when the move from what the options were telling us yesterday till today is very, very important. Because they tell us where at least the option market makers think that this market is going. And like I said, most of the time these guys are right. So we've got a little bullish bias even in a down market over the next 7 days. So we'll continue to watch it. So just something that we need to be wary of. But it is almost and probably over. So the last 30 minutes to the last hour of this Wednesday is what I would call the truth. Everybody always says the truth is in price. Well, on options expiration day and going into it on the delta neutral day, and if you want more information on this, go to Wikipedia, just type in delta neutral, and you'll see the mathematical description of how this is done. But what we have normally about this time of day is you'll start seeing volume pick up and you'll see some kind of direction in the market. And the close is normally the truth in the market, not the price intraday on this Wednesday day. Yeah, the same kind of thing on actual expiration day. A lot of times you'll see some phoniness. And normally the problem is that with options rollover, you get about 2 days that's for the most part, a lot of noise or counter trend, and you don't really get back into the market probably that Tuesday afternoon after expiration as people get in and out. You know, they're buying and selling equities mostly on the opposite side of what they believe, which is their option position. So just be wary that there are counter trends, there are eddies in the current, and they are called options. On this day in 1979, Paul Volcker takes office as chairman of the Federal Reserve Board. Inflation, the chief destroyer of America's household wealth, will soon be on the run, and interest rates will drop almost continuously for the next 20 years, creating a stock market boom and a flood of new home ownership. Well, my dad was in the real estate business when I graduated from high school 1 year earlier. Of course, we were deep in a recession. We had probably one of the most worthless presidents, at least in foreign policy and U.S. policy, if you go by surveys in the last 100 years. He couldn't help but be weak on foreign policy, and it caused ripple effects at home, including a lot of policies and probably hangover from the Vietnam War, causing all the massive inflation. So I won't put all the eggs in front of one basket in front of that president, but boy, just living through it. He just wasn't. He wasn't the coach you wanted on your side of the football team. Let me put it that way. They called him a micromanager. Anyway, of course, I graduated right then. Employment was horrible. I wanted to join the Air Force, but of course, like today, they were winding it down significantly. There was no room in the Air Force for me, even though I got in and got an appointment I broke my arm and that fell through. So there were other issues going on. But being out and deciding that I was going to go full tilt morally into the computer revolution, it was a bright time for a very small part of that market and a very dark time, especially for my dad, trying to sell houses in a 22% interest rate environment. And he didn't have a lot of spare cash, needless to say. He also did something really stupid, which is focus on really cheap homes. So he had to sell about twice as many homes to make the same cash as someone doing about an average business on an average home. And of course, these folks had the worst credit, and it was harder to sell to them than anything. But I digress. But what we do know is Paul Volcker. What did he do? He gave us that horrible tasting medicine. And within a couple of years, the market responded to it. I guess my point here is that politicians will rarely do the right thing. And every once in a while, a hero comes along. He wasn't Greenspan, and he wasn't Mr. Bernanke. And so far, I'm not going to say that the hero is Yellen. But if we have one guy to look back at that did the right thing when it was asked of him, it was Paul Volcker. He gave us our pain. He gave us the nasty tasting medicine, and we were all better for it. And again, of course, markets don't culminate in one grand blaze of glory. And they don't reverse in a minute either. And all truth passes through three stages. First, it's ridiculed. Secondly, it's violently opposed. And third, it's being accepted as self-evident. I'm still waiting for that third part of this top to come in. Thank you, Arthur Schopenhauer. 1788 to 1860. Pretty smart dude. I've read some of this stuff, even if I can't pronounce his name correctly after 3 years of German. It's just been a long time. After the bell tonight, American Capital, Atmel, BioScript, Brookdale Senior Living, CenturyLink, Conchito Resources, Dynegy, Flowtech, Gulfport Energy, Intermune, Jack in the Box, Keurig, Green Mountain, MBIA, Molycorp, Prudential Financial, Sanchez Energy, Sandridge Energy, Symantec, Transocean, True Harbors, Westar Energy, and YY Inc. We'll be back in just a minute. We'll got more wonderful news, and we'll get into charts at the bottom of the hour.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive The Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're flat on the S&P, cash approaching 2.4 billion shares. And as always, you can call me at 877-927-6648, just like Sam from Irvine, California, has done. How are you doing today, Sam?
Thank you very much. Thank you, Dave. I want to thank you for the great call last week regarding Rite Aid. You told me David Ironhorn is selling this stuff, and don't enter the stock until it hits 585 or so. I want to know what you think now.
It's exceeded and got into this candle for April 7th with 39 million shares. It's already 46. So that takes you down to $4.73.
That's great. Thank you. All right.
So, yeah, it's busted, and you've got a light volume, kind of a minor low at 523. But my guess is you're going to get into that day of December 20th of 2013. And that's your heavy, high-volume down day. There's even another one with a gap up. And this thing, if it gets down in there and the market gets horrible, there is a gap out here that's a huge gap, too, out here on the, September 19th of last year. And it could, if it gets down to that 473, you might see a nice pop down in there. Ideally, that would be the absolute best place to buy that, and that would be right around $4. I can't tell you, I'm not going to predict the future other than you probably have an 85% chance of this thing testing 473 now. And probably I would say 65% chance of it going into this gap. This heavy volume today is kind of the death knell of this thing. You really didn't want it. You had some high volume on June 16th, 59 million shares. I think you're going to get that today, which is going to mean you're accelerating and coming down with even heavier volume. It may play around here for a while, but this thing is $4.73 or $4. So you've got a little ways to wait for this thing.
There is one news on it. Do you know what that is today because of 49 million shares?
Yes, I know. Hang on a second.
And I was wondering if this stock is ever going to go retrace a little bit higher again and go back down, or just going to keep going down?
It's probably going to, no stock really, there's few stocks, let me put it that way, they go straight down. It'd probably take a couple months to get, maybe a month to get back down into that $4.50 level. So I think you've got a month or two. When it gets down there, it's probably going to have to consolidate, and that will be it. Looks to me that it's actually a bank shot from news out here from Walgreens and what they've been saying. So just a whole sector issue out here. Let's see. Walgreens announced it would purchase the remaining 55% of shares of British health and beauty operator Alliance Boots, quash any hopes of reorganization through a tax inversion that would allow Walgreens to pay less U.S. taxes. We rate Rite Aid a whole primary factors have impacted our rating are mixed, and some indicating strength, some weakness, little evidence to justify anything. I just don't see much it just looks to me like the whole sector out there is sucking it. So that's about it.
All right. Thank you very much for your guidance. I appreciate it.
I mean, the volume today is what you were looking for. It's accelerating, and my guess is that you're going to see this thing play around for a while. But these things all kind of look like they've kind of blown up. And, you could have had a nice, when you get this thing down at $4, then you've got that target up there at $7.75. So it's just, it's a lot of patience out there in this market.
I'll be patient. Thank you very much for your guidance, sir.
Bye. Bye. Of course, the disaster du jour is a new skin. It's down 20%, or was down 20%. I'll get a current quote for it here. Pre-market, 19.35. We'll round it to 20%, $46.71. Reported a 73% decline in quarterly profits. Now, remember, this is one of the stocks that's very much like HLF, Herbalife, and that there are a lot of funny business going over there in China in these multi-level marketing companies. It was the first to get the skewer. I suspect HLF will get the skewer also. But down fairly strongly. We're going to get into the rest of the stocks moving and then get into some charts here in this second half of the Power Trading Hour. Give me a call, 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, just looking at the stocks moving, like we said, New Skin, these are all, I think, about 15 minutes before the show started, but probably still pretty close. New Skin was down 20%. Lionbridge Technologies off just about 15. Time Warner off 12, of course, on the news that Fox has decided to go its own way. Cognizant off 12. Cumulus Media off 11. Crestwood Equity off 9. Parker Hannifin off just a little less than 5. And 4% on a red. Pharmaceuticals. Those are the stinking stocks out there. And the ones moving today on the upside, WPX Energy, Caesarstone, Parker Drilling, Neonode, AOL, and we're going to talk about that in a minute. ITT Educational Services, kind of a nice pop, I think, on short covering. And Alpha Natural Resources, actually fairly decent ANR, almost 7%. Molson's Coors Brewing Company, of course, cereal malt adult beverages. And if I could just drink more than one, beer fills me up instantly. I can't drink a six-pack like a lot of people said. A lot of tech news going on out there. Apple and Samsung are waving the white flags at each other, at least in the rest of the world, on patents. I think they're going to have to go through a few things before that happens. Of course, when Apple really started to look weak yesterday, the PR firm part of its business got into overdrive and started pumping out PR statements to make sure that its stock stayed up. Very rare to see a company as active in holding up its stock with PR. I know a lot of companies do with share buybacks, but Apple extremely vigilant in seeing any tick down in its stock price and going right after it with more PR. In their case, they basically said, oh, by the way, we're down $1.50. Oh, September 9th, we're introducing our new products. And it always seems a little suspect that there's always some PR round in the chamber just waiting for any opportunity. But highly manipulated stocks are like that, whether they're manipulated by the street themselves or by the company themselves. Apple is probably one of the most vigorous about that. But Apple's got its big show. Of course, Samsung saw them come out with it, and within a couple hours, Samsung was saying that they were going to have their next Note, which is that giant phablet phone, which is more almost a tablet-sized phone. They're going to have their next new one out. And, of course, looking at the tea leaves, I suspect it's going to have one of the new graphene screens. Of course, Apple's going to be going with Sapphire. And we're going to have a lot better screens out there that are a lot harder to break. AOL was up almost $3 today. Just when you go through their earnings, just absolutely interesting to see how much money you can get out of people that refuse to leave your service because they are so scared to even get a new email address that they are going to stick with probably the worst service in America. For internet service providers. Of course, there's still a lot of people out there that are on dial-up out in the middle of nowhere and get their email for them. But they've been able to raise their prices 100% over the last 5 or 7 years. It's about $20 for what used to be $9.95 a month when they send out 5 billion of those CDs. Somehow I know that there's a refuse landfill that is full of nothing but those AOL CDs. But it is interesting to see how long they can hold this up until all their customers age and finally die off. It's about 10%, it seems like, about a year. But they just keep raising the price, which gives them higher margin. And there's something to managing a ship going down. You can just go and hide in your quarters like the captain of the Titanic did. Or in this case, you can be probably one of the worst human beings in the world. I'm talking about the CEO, Armstrong. I would use several words for him, but I don't think I would be invited back yet tomorrow to the wonderful TFNN microphone if I said what I thought of this guy. But if you're a shareholder, you probably like it. One of the few companies out here that is making a probably lemonade out of a lot of lemons in a horrible company. There will be a tipping point, though, and when that tipping point comes, AOL is probably headed down, making a lot of noise about how well the company is doing with Huffing and Puffington Post. But as far as I can tell, they're not really making any kind of decent ad revenues out there. It's not like it's mobile. They're talking a great deal about TechCrunch and some of the other things that these guys do. But it's hard for me looking through these that it isn't all people with old AOL accounts just paying twice what they did 5 years ago for something that should cost a third. And there's something to be to being the last buggy whip manufacturer out there. And they're making it work. So more power to them until that tipping point happens. And AOL Mail is not still good. It's horrible. It's the worst. I'm about 50% chance of getting my email to anybody on AOL. It is one of the worst, most disgusting services in the world. My engineer is trying to put something in there. It's horrible. Don't even start to get on me with AOL. Anyway. Other things going on out there. Pandora made at least a small effort to get licensing from a lot of the third-tier music labels out there. Still don't think that there's much of a future. Of course, there's nobody making money in streaming audio right now. Everybody's in it. They all think that there's gold in them, their hills. And as far as I can tell, musicians, record labels, and these streaming services are all making $0 and throwing lots of cash down a rat hole. Maybe it'll be like the airline business in 30 years of going bankrupt over and over again. Eventually, one of these companies is going to figure out a way to make cash. So far, I do not see it. Although I love Spotify, I don't see how they make any money. I don't pay them anything. Timex, the take a licking and keep on ticking, and Qualcomm are getting together with their wearable watch item. And, of course, even Samsung's got another watch coming out. It looks like there's going to be no end ad nauseum to products that I probably won't buy, like fitness watches and other things. It's just hard for me to get all excited about a watch that talks to your smartphone already. I can talk to my smartphone, don't need a watch, don't want a watch. Especially working in electronics, you got to take off all your electronic stuff that's going to fry you when you lean on over into it. But I digress. It is a mad market. We're going to take a look at some of these stocks as quickly as we can with the remainder of the show. Again, you can always give me a call at 877-927-6648. We'll be glad to take your call. See if you got mail. I did you hear that? You must understand this. Understand what? Potential graphene having a lightweight, thin, flexible, durable display, as well as something else. Yes, I understand that the wonders of graphene. I just don't think anybody other than people actually using it are going to make any cash out of it. It's kind of like aluminum. Aluminum companies are going to make some cash out of making aluminum. But the people using it to make a car top or probably making a lot more money on that aluminum than the aluminum company is. That's my thought. It's a commodity, and there will be people making cash out of it, but it's not going to be the graphene people, I don't think. Anyway, there's going to be a few people making machines to make sheets of graphene to put together, but I don't think it's going to be, they're not going to be in the Apple, let me put it that way. They're going to be a lower level companies, and maybe you can get in the ground floor of one of them and they'll make decent money, but I don't think we're looking at the next Microsoft, next Intel, for somebody that's just making sheets of graphene. Probably maybe a semiconductor company that uses graphene to make a better semiconductor processor than Intel. That would be interesting. But I have a feeling it's more about the application than making graphene itself. Anyway, what else do we have going on here? I wanted to look at some of the stocks. Not a whole lot of stocks out there giving signals right now. There are a few. Dick's Sporting Goods. A lot of these retailers have been crushed. We've been talking about that for a while. And what I think is most interesting in these stocks being crushed is finally they're starting to give at least some small dent in retail that maybe it might be bottoming. Dick's Sporting Goods, DKS, is the symbol. This thing came down with monster volume on the 20th. Had an automatic rally up to 47.49, and now probably in a fairly decent trading range between that $42.33 low back on May 28th. It's gone below it. What are we going to close at? 42.56. That puts us back in the trading range out here today with a decent close, which means that if you were thinking this thing is going to go short or short it and it's going down even farther, probably going to be kind of tough. It's probably in some fairly decent support. Energy was just a little bit heavier, so I wouldn't go long this thing, but this thing could bounce up and down maybe for 8 weeks. And if this thing bases out and the volume becomes very light, you might want to be taking a look at it. Some of these other stocks that have been hammered down, like Red-Headed Stepchild, beaten like a seal, baby seal up in Alaska. all the other things I bring up. Another one is EBIX. This thing rocketed down on June 4th with 4.7 million shares down to $12.35, made its exhaustion low, had its bounce, and then, of course, now kind of going sideways, seeing a little volume in this thing pop up today. This company produces software and e-commerce solutions to the insurance industry. I think we talked a little bit about this one yesterday. And, of course, a lot of intraday movement in the inverse XIV. We're up, not less than a point on the S&P cash with 2.5 billion shares. And, of course, VIX probably pulling back just a little. Let's take a, where's that at? Mr. VIXy up here. 56 cents. Not a whole lot for the way that this market's been moving. But like I said, it's going to be the last 30 minutes of this day before we take a look. Someone brought up Zillow in the den. Let's take a quick look at how it's doing today. Of course, it had earnings. Seemed after hours that they were going to pop this thing with earnings, and kind of rolled over yesterday, down a little bit farther today. Looks to me like the bottom of support would be right around 126, 127. This giant candle with a decent volume when it popped up. Of course, they are talking about buying out yet another company. So probably one that's tough out here to actually trade, but maybe down here at about 130, 128, you'd have to take a look at this thing. Volume, nice move in the volume charts, but a little tougher to get the rest of it going out here. On some of the stocks that we really didn't get into yesterday, Sonos is one of these. It had a little higher volume than we're looking for. So this thing has opened up, Sunoco has opened up, I suspect, the low, which is $36.59. Had, some strong volume down on the first was 600,000 shares, and kind of breaking support in this area. Got our little bounce out here along with another refiner. What's the name of that one? V. Someone in the den probably can tell me. What is that? Not Valrico. What is the symbol on it? Someone will tell me in a minute here. What was the other one out here I wanted to take a look at? We brought up Fossil. Want to see how that's reacting a little. We told you on Monday how this one was coming into a nice little low. Probably a nice little bounce out of this one. And, a few percent out here. Enough to wet your beak. This thing was coming into the May 15th low of $98.53, 1.7 million shares. It's dipped below it, closed above it on Monday. I think when we were talking about it with a whole lot less volume. And, of course, you're getting a little juice out of here. Not a lot of volume today. And, again, this thing's probably going to consolidate. But if you want to make a couple bucks, a lot of times when these things pop back into the trading range, you're going to get a few bucks out of them. But volume today should say that you are going to be scared. Look at Mattel when we come back and some of these others. You can always give me a call, 877-927-6648, or email me at path@tfnn.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we had a call from Mike in Thailand. He couldn't hang on because it's about $100 a minute, I guess. Anyway, Mike from Thailand says, let's talk about the dollar. Is it going to rally? It certainly looks that way to me. We get, I tell you, about the most divergence in the world out here. You'd think that the dollar was ready to rally, and, of course, you'd probably see gold muted. Of course, we get a big move like we have seen today in gold, and it's just really tough. Now, I'm wondering whether or not this is the outlier in gold, and I'll try to talk about that tomorrow. I don't think there's enough time. I need to do some charts and draw on some stuff for you guys. Gold is up $24, silver up 24 cents today, but we continue to see commodities kind of being pushed around. See gold starting to be bought going in to this weekend, and of course a lot of problems with Russia, the Ukraine, and the rest of the world. So we might see a little bit of people. I see a lot of people trying to buy, quote, quote, safe stocks, commodities, that kind of stuff. But it could be very interesting out here. But seeing the dollar trying to rally and gold pop 20 or $25 today, I think there's just going to be a huge amount of noise. So I guess the question comes back into do I think the dollar's going to rally? And I think the answer is yes. I think all you have to do is look at the problems that Europe is facing And I think you're going to see, as they continue to go down, we're going to see the dollar continue to move up. And eventually, I think one day we're probably going to get back to par. But that's probably a couple of years down the line. But I think we have all the makings of, I'm in the camp of higher interest rates, which will make the dollar go higher. And I'm in the camp of lower euro and problems continuing in Europe. I had a question in the den, what's the biggest problem with Apple? And I would say the saturation in the smartphone market. And, of course, Samsung always coming out with bigger and bigger tablets. Pretty soon it's going to be a billboard-sized phone. But it is interesting. Now, what I look at for long-term trends in the market is a thing called a displaced moving average. That's where you average 3 days or 7 days or 25 days, and you put that number out in front of you. And to me, what you would want to see if you think Apple is topped out here is a close below that 25 by 5, which is the long-term trend of the market. My model looks at the long-term trends with this 25 by 5 displaced moving average. It gets a very good description of kind of long-term trends in the market. And as one of the strongest stocks that everybody talks about in the S&P, in the NASDAQ, if this thing really would close below that moving average, you really have to look at it. This thing is not closed underneath it back to, what is it, the April 23rd, and it's kind of bounced off of it at least, well, once so far. And here's where you'd have to look and see whether it comes in fairly strong. It doesn't look like Apple's going to be shipping their products probably until October, even though they're going to announce them in September. I hear that there's some delays in some of the new Apple 6 production, or production, iPhone 6 production. So you want to be looking at that. But as the rest of the day goes on, just keep an eye on it here. Any huge miss or move down in Apple right now could fold the market. We'll talk about that again tomorrow. Hang on for Tom O'Brien for the next 2 hours.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.